Traditional banking and finance is being disrupted by new technologies like blockchain and new concepts like decentralized finance. Mr. Piyush Gupta is leading DBS Bank as it navigates this new disrupted era of digital banking. The CEO of Southeast Asia's biggest lender has made digitalization and innovation his organization's mantra. I'm Irene Tam, tech editor at The Straits Times. I'm here today with Mr. Gupta in DBS's office at Marina Bay Financial Centre. He helps us cut through the crypto blockchain mumbo-jumbo and explains why he bought bitcoins, which he said could provide a store of value like gold. What has been the most profound change to banking that you have seen in the 40 years that you've been in the industry?
Well, Irene, I think without a doubt that has got to be the digitization that we have seen in the last 10 years or so. I think what has happened across every industry, by the way, is that the new technology has caused a complete shift in customer expectations. And so there's an expectation that you can start your relationship instantly, you can transact instantly, the bank will know you, the bank will make things available to you in real time. These never existed 40 years ago, even 20 years ago. And that change has been quite profound. It's caused us to have to think and recognize that we're really a technology company offering banking services.
What is your proudest achievement in your time as CEO of DBS Bank?
I think what DBS is today, if you ask most people in the market or ask our own employees, is a very different animal from the DBS of 10, 12 years ago because of the way people feel about themselves. There's a tremendous sense of pride in the employee base. We can today hire the best from any company in the world. People are a lot more creative, they're a lot more innovative, they're a lot more prepared to take risks, and above all, they're a lot more customer-centric.
What is the one thing that people often get wrong about blockchain technologies and decentralized finance and cryptocurrencies?
Most important thing that people get wrong is you conflate all of them. The technology, which is blockchain or distributed ledger, is very different from the construct of DeFi. You can have the technology without DeFi, which is very different from the construct of cryptocurrency. You can have the technology, you can have DeFi, and then you still might not have cryptocurrencies. So if I unbundle that thing, first, blockchain is really a new method of being able to create using a consensus mechanism, of being able to record who owns assets, who has made payments and transacted on assets, and therefore get line of sight without a central hub, without a central authority keeping track. Right? That's what the technology does. That technology is extraordinarily powerful because it has tremendous consequences. It can change the back office of the whole world. It can change the role of stock exchanges, registrars of societies. Any central record-keeping entity can be dismantled, and you can do that through this technology. But that's very different from DeFi. Now, DeFi says that you use this technology, and if you can use this technology, you can architect a world where every one of us, 8 billion people, become self-sovereign individuals, and we all deal with ourselves only on the basis of smart contracts. Yes, the technology is important, but this is an evolution. It goes to the next level, saying you don't need, frankly, in the long term, you don't need nations, you don't need states, you don't need central banks, you don't need banks. We will all deal with ourselves one-to-one across the whole universe, across the whole planet, based on smart contracts. Now, that is a completely different construct than just use of the technology, because that calls into account very important beliefs. Do you believe in the role of societies? Do you believe in the role of nation states? Do you believe in the role of governments? When you get to currencies, cryptocurrencies, so a cryptocurrency by definition, Irene, is very simple. You use cryptographic algorithms and the blockchain to be able to determine who owns what and how do you make settlements. That makes a cryptocurrency. Now, within that, the real difference is there are two kinds. One is publicly issued currency, and one is privately issued currency. And that's where the differences start arising. If a currency is publicly issued, which means central bank digital currency, that tends to have a far greater degree of reliability and a far greater degree of trust. It's more likely to become over time a medium of exchange. But when some unknown entity issues that currency, private money, right, using the same technology, then you start getting into more question marks. So if you look at most of the crypto coins, which people typically think of, whether it's a Bitcoin or Bitcoin X or Ether, Ripple, most of them have suffered from a lot of volatility in price. And that makes this privately issued currency not very suitable for true transacting money. You can't use it as a unit of account easily because the value changes. So privately issued cryptocurrency so far has really been a store of value. And even as a store of value, it is very volatile. I mean, the market cap of all the cryptos a month ago was $3 trillion. Today it is $700 billion, 70% crash. So that's been a challenge. But if you think about using the same technology for public money, right, which a lot of central banks are now working on, whether a retail CBDC or a wholesale CBDC, I think the technology is quite consequential. Remember, the nature of money has changed over the last 1,000 years. It used to be cowrie shells, and then as technology keeps changing, the nature changes. That's not a surprise, and you should expect as mobile phones and other gadgets get ubiquitous, the nature of money will keep changing. But the underlying issue of who issues it, how much trust and confidence you have, is really a public and private issue.
So it looks like a central bank involvement and regulation is necessary for the technology to reach its fullest potential.
Well, that is my view. I think, you could always create private money at Bitcoin. I think it could be a store of value. Could a private currency replace gold? It's not impossible. Frankly, why does gold have value? It's only because we all collectively believe that it is valuable. So over time, could you get private currency people ascribe value to? It's not impossible. However, to really use it as money, unit of exchange, medium of exchange, unit of account and store of value, I think it needs regulation. And I think it needs the active participation of central banks and, frankly, international organizations.
Have you personally or DBS invested in cryptocurrency?
DBS has not. But I'll tell you an amusing story. When we were looking at launching our crypto exchange, we were getting somewhat delayed. And when we were getting delayed, I finally told the team, I gave them a date and said, you'd better have the exchange up and running on that date because I want to buy. Well, they got the exchange ready, but then I had to buy. So I bought 5 coins at that time. I was lucky because the prices went up. I sold half of my holdings. So the rest of them, 2 or 3 coins I have are now basically at no cost.
What changes are needed for Singapore to produce a local-born Piyush Gupta?
First of all, I think there are a lot of very talented people that Singapore has produced. A lot of them in the public sector. So I do believe that the fact that we streamed our best into the public sector over time has a consequence. You don't get enough of them coming into the private sector, but there's very good talent. If you look at them, there's some outstanding leaders in the country. So I think it's not appropriate to think that I'm sort of unique in the entire ecosphere of Singapore. But how do you, I think if you genderize the question, how do you really create leaders and how can Singapore create better and more leaders? I think part of the answer lies in letting people face the rough and tumble of life early on. In Singapore, because everything generally tends to be well orchestrated and laid out for us, life becomes a little easier. It's like having a manicured garden versus having to go out into the heath and having to deal with different kinds of fauna and flora. So I think we need to give our young people the opportunity to go and learn through failure, experimentation, instead of having a manicured existence.